All right, let's talk about the closing. It's that final, exciting step, but it's also where surprise costs can pop up and create a ton of last-minute stress. So, in this breakdown, we're going to pull back the curtain on all the taxes and fees in a property sale. The goal? To help you guide your clients to a smooth, totally surprise-free closing every single time. Let's get into it.
So, picture this. You're at the notary's office. You think everything is wrapped up, and then the final bill comes. That look of shock on your client's face, it can totally undermine all the trust you've built. We've all seen it happen, but you know what? It's a problem you can absolutely prevent.
By the end of this quick guide, you'll have everything you need to prepare your clients for every single cost. No more nasty surprises. Just confident, happy clients who trust you completely. So let's break it all down.
Okay, first things first, taxes. When you sell a property, there are really three main tax concepts that are always part of the conversation. Getting these straight is step number one to mastering the whole closing process.
So, what are they? Well, first you've got ISR, which is the federal income tax on any profit made from the sale. Then you've got local taxes for the actual change of ownership, and these can vary depending on where you are. And finally, there's IVA or VAT, and this one has a very specific rule that you absolutely need to know. And that's the big question, right? IVA is the one that always seems to cause some confusion. Does it apply to every property, just the expensive ones? The rule is actually way simpler than you'd think, and knowing it makes you look like a total pro.
Here it is. VAT, or IVA, only gets charged when the property is for commercial use. Think offices, storefronts, warehouses, that kind of thing. If you're dealing with a regular house or an apartment for someone to live in, no VAT. It's a really clean, simple distinction you can share with your clients to put their minds at ease.
Okay, now let's dive into a specific rule within the ISR law that is just pro-level knowledge. Seriously, this is the kind of detail that protects your buyer and shows you are on top of every little thing.
So you have two key numbers. On one side, you've got the sale price, what everyone agreed on. On the other, you've got the official value, either from an appraisal or the city's records. Now, this proto rule kicks in if that official value is more than 10% higher than what your client is actually paying. For example, let's say your client buys a place for $2 million, but the official appraisal comes in at $2.5 million. That's a pretty big gap, and it's what triggers this special rule.
So what happens when you cross that 10% line? Well, the buyer gets hit with a tax, and it's not a small one. It's a pretty significant 20%.
But, and this is the most important part, that 20% ISR isn't on the total value. No way! It's calculated only on the difference, on that excess amount. So in our example, the difference between the $2.5 million appraisal and the $2 million sales price is $500,000. Your buyer pays 20% of that $500,000, which is $100,000. That is a massive distinction that can save your client from a huge panic attack.
All right, we've nailed the taxes, but to give your clients the full picture, we've got to look beyond them. Let's talk about the other administrative costs that come with finalizing the deed, the escritura.
So your client also needs to budget for these four things. There's the fee to get the new deed registered at the Public Registry. Then you have the notary's professional fees for their work. There's also the cost of an appraisal, if one is needed. And finally, the fee for getting a certificate that proves the property is totally free of any debts or liens.
You know, when it all comes down to it, this is all about one thing: transparency. When you can walk your client through every single cost, clearly and confidently, you're not just giving them information, you're building solid, unshakable trust.
This old saying just says it all, doesn't it? Clear accounting makes for happy clients. When the numbers are out in the open from day one, your clients feel safe and they feel respected. And that feeling, that's what builds a fantastic reputation and a really successful career.
By really mastering these numbers, you empower yourself and you empower your clients. You take a moment that could be full of stress and you turn it into a celebration. So, with all this knowledge in your back pocket, the only question left is, are you ready to make your next closing the smoothest one yet?